You were listening to chartingwealth.com for Thursday, the 8th of October, 2015. It is great to have you with us today. We are looking at what's going on in the markets, and there is a lot. The total market IYY is where we always start, and it crossed over going up on the two-day trend line on the 5th. That was Monday. It had been going down until Friday, where it appeared to settle out. Actually, on the two-day candle on the 1st of October and the two-day candle on the 29th, it appeared to reach its bottom. It then rotated over and started moving up. We had a crossover on our MACD. That's the moving average convergence divergence indicator. About the same time, we had the derivative oscillator begin to weaken and then move over. And we have seen on the last candle that we have, that is the two-day candle for the 7th of October, we have seen an upsurge. But what is it upsurged to? Well, the purple line that we drew several weeks ago, and we saw the whole market topping out at that line, and it has not passed it yet. If we go back to our 4-hour chart, we see that the market has hit on that for 5 half days, so about 2.5 days. We've stayed right there. We see the derivative oscillator losing a little. We see the MACD pretty much staying about where really since about the morning of the 6th, we've seen the MACD, the moving average convergence divergence line, stay about the same, that and the signal line. So it has not lost all of its strength, but when we look at price, we see that the price appears to be wearing down, but the market could just be digesting that. It was technically up total for the day of 0.92%. Now, if we drop back to the two-day chart and we go to SPY, that is the Standard & Poor 500, we see it crossed over about the same time Monday morning on the October 5th two-day candle, and it has continued to push up. It pushed through the 30 and the 34 period moving linear regression lines, and it too appears to have stopped on our ceiling line. Now, we'll continue to watch and see just what happens there, but that does appear to be where the energy has moved it up to so far. Yes, it could push through that, but let's take a look at the 4-hour chart, and we can see again, very similar to the total market, it has pretty much stopped there. Now, will it push through tomorrow, or will it roll back over and go down? Well, that is the $64,000 question that we shall sure pay attention to. And again, the MACD, the moving average convergence divergence line, is looking very similar, and we can see that it is losing energy on the pale green boxes. For those of you that are watching via video, those who are listening via audio, you can see that the derivative oscillator is losing some of its speed. So we'll continue to monitor the total market and the SPY, and also the Qs, which is the Nasdaq 100 that we're looking at next. However, I did want to note SPY was up for the day 0.82%. Now we're going to convert over to the Qs, which is the Nasdaq 100. And again, this is an ETF that tracks the movement in the technology stocks. We see them crossing over there right around the beginning of the candle on the 5th. That is the two-day candle on the 5th of October. It crossed over moving up, and it too has hit the purple line and has not moved above it over the last 4 days. We can see a long wick on the candle on the 5th of October, and we see the wick on the 7th of October. Both have touched that purple line. We'll see if there's enough energy. There does appear to be, as we see the crossing over going up and the derivative oscillator is flipped over, but let's continue to watch that price action. Now, when we revert back to the 4-hour chart, what do we see? Well, we see the 4-hour chart having touched 5 times right at that purple line, and we'll just have to continue to watch. We did have an up day today, but again, not far enough up to push above the purple line, our potential ceiling for this market. We'll continue to watch that. Now, lastly, let's go back to our two-day chart. What are we going to look at? We're going to look at gold, the way we always finish up. Gold was technically down for the day 0.15%. Now, those looking at the video see that actually it shows an up candle. Well, that's for the entire last 2 days. It is up. But what do we really care about in gold? We see the market crossed over going up on the 2-day chart on gold back between the 15th and the 17th of September. And it's gone up some and then lost some energy and moved up some. Really, even the close of this 2-day candle for the 7th, it's not gone, it's not closed above where the market touched back on the 25th of September. But what we really care about on gold is we care about what's going on with the 4-hour chart. That is the one that really tells us what's going on in gold. And what has it continued to do? Well, it crossed over going up on the 5th. You would have done well in gold if you had gotten in around then. And it has slid sideways for the last 2 days. It reached its peak on the 6th, and it's continued to move sideways. We don't have a crossover going down yet. We do see the derivative oscillator is losing some of its energy. We do see that the MACD appears to be getting closer together between the signal line and the moving average convergence divergence, but that has not yet happened. So we cannot call it a down market. Our large chart, the 2-day chart, is up. The 4-hour chart is up, but we are watching cautiously because we have a ceiling that has formed that it's not really moved above, and we want to continue to pay attention to that around 110.11. So $110.11 on gold. It has not gone above that in about 4 days. So mark that down, those of you who are in a virtual trade on gold. And if you see it continue to move below that and break the trend line that you might draw on gold, I would be very cautious. In fact, pretty much any trend line you draw right now would have been broken. So continue to be careful on gold. It may have made its height to this point, but it may not have. So again, does look like it's losing energy, but we don't have a call yet on it going down. We love our 4-hour trend. It seems to be the one that works in gold over and over and over again. So watch for that. Thank you so much for listening to us today. If you have any questions, please let us hear from you. If you would like to receive the charts that we use for free, the layout we use from freestockcharts.com, all we have to do is hear from you. You can always write a CW at chartingwealth.com. That's C as in charting, W as in wealth, CW at chartingwealth.com. We'll be happy to send you those charts, and we'll also send you a link to our 15-minute free video where you can learn to actually trade. It's a quick down and dirty, teaches you how to actually read a chart so that you can figure out on your own when it makes sense to make an investment. And again, we teach virtual trading. We're not telling you what to do with real money, but we want you to start experimenting, getting into the market virtually, which you can set up at any brokerage firm, a free virtual account, and you can trade things like GLD, gold, which is an ETF, easy to buy and sell, very liquid. You can buy it, you can sell it day in and day out. You can do the same with SPY. You can do the same with the Qs. They're all available day in and day out. So learn what the markets are really about. We're here to help you at chartingwealth.com. Lots of good training at our website, and we bring you this broadcast every day the market is open. Thanks so much for joining us from chartingwealth.com.